Welcome to week number 16, starting off by looking at the inflation expectations and overlaying with AUDJPY, which is the orange line. Last week we saw a little bit of a divergence where AUDJPY moved a little bit higher, inflation expectation actually dropped a little bit. So I'm expecting this divergence to close ideally early in the week as of Monday. Apart from that, we're diving straight into the calendar. So next week we have a lot of good events that causes volatility, but not so early in the week. So on Monday I'm not really expecting a lot of movement, neither on Tuesday, even though there's some good data due for the pound. It is overall expected that pound should perform a little bit better, but I won't be probably taking any positions until later in the week as some of the sentiment starts to shape. Picking up with AUDJPY, I am looking for these recent very ominous looking top to hold early in the week, as early as Sunday and Monday, and start climbing down to lower levels at 83.40. So not a huge move, but really just to come back in line with what the yield, the inflation expectations are. So possibly a drop of about 70-80 pips would be ideal, just to get that divergence sorted that I pointed out in a chart before. Moving on, we've got Kiwi CPI. Now that data doesn't tell me anything. Why? Because it gets published every once in a quarter, so it's very dated, but it does still sometimes give us a little bit of volatility, specifically if it's on higher or lower than expectations. So I would watch that event, but it's nothing I really want to get excited about early in the week. Something else I'm really interested in is actually NZD-CAD. I think NZD-CAD got great potential either way. I am more inclined to sell it because I believe that the Canadian economy is doing better than the New Zealand economy. We had loads of good things going New Zealand's favor last week, but the rally was really modest. Another thing that will play in our favor is we see a little bit of negative risk sentiment, and very quickly you can find that NZD-CAD could be trading as low as 88 and possibly lower. Now, as we are having interest rate decisions by the Bank of Canada next week, I always like to look at the comparable lead charts, ideally the shorter term. So I'll be looking at the 2-year yield from New Zealand over the Canadian 2-year yield. So it's commonly called a spread chart. And if you overlay that with NZD-CAD, you can see we are not hugely in a divergence here. It's not particularly saying that one is more in favor of the other. It is fairly priced. Maybe NZD-CAD got a little bit ahead of itself last week, but it's sort of rounding up again. So we don't really have, we don't really have a scenario where we can say NZD-CAD is mispriced. I'll be taking my lead more from what's happening with sentiment, and overall I'm a little bit more tilted towards Canadian dollar, specifically against some of the cyclicals, which by the way is against what the consensus is. So most analysts are saying AUD and NZD should outperform CAD, but I don't see that happening, specifically because Canadian economy is really benefiting from the stimulus in the United States. So that's a trade I'd be interested to take around on Wednesday, possibly around the rate announcement. But we have a lot of movement also on the GBP front. So have a look at GBPUSD. Last week we saw an incredible bounce back from GBPUSD, specifically around the CPI read. So I was bullish in EURUSD around the CPI week last week, and some of it found its way in GBPUSD as well. So now we're finally at interesting juncture, and questions start popping. Are we heading back to 140 again? Is this all a good trade? Is GBP still strong? You hear a lot of cyclicals are going in favor of GBP, and to be honest, you have loads of positive data coming into next week as well. So why would you not want to buy GBP? Which is a fair question. One of the reasons is if everybody thinks the same, not a lot of thinking a lot. That means for me, I'm a bit shy lagging into GBP longs, as everybody seems to be bullish on it, where I believe there's not a lot bullish to be priced in. It's fairly priced at where it is. Maybe a couple of 50 pips up or below, for me, isn't a isn't a game changer. I would take my cue on GBPUSD, what other pairs are doing, specifically the US dollar. And while we talk about US dollar, it's always good to have a look at EURUSD. So last week and the week before, on our analysis on the weekly analysis of week 14 and week 15, I've pointed out why EURUSD is trading higher. Now it really stuck under the 120 level, and a lot of analysts are looking at this as a pivotal key. If it goes over 120, all of a sudden it can open up 400 pips. Now, when I'm looking at the situation, I look at it that a few pips will make a dramatic difference to market thinking. What I'm understanding is this whole drop happened because euro longs were covering, and the last 2 weeks euro went up, not because of new positioning establishing, but just because the US yields started to move down a bit while the German yields were stuck. So I've got a chart that is the bond spread, which basically tells you the difference between US yields and German yields, which are always a main driver over the long term for EURUSD. So if I put EURUSD on the chart, you can see what the really dynamic was, what the real reason was behind all of this. So then the question obviously would be, where is yield spreads headed? Are we headed higher again? Does it mean EURUSD can go higher, or is this just a retracement? Should we start looking for shorts? And to answer that question, we'll have to look at what German yields do towards Thursday and Friday, when the ECB is speaking, and there's loads of data coming from the Euro front as well. The basic thinking is that the ECB wants lower German yields. They are very, very verbal about it, and they're actually doing stuff about it. So they're spending a lot of money buying bonds to drag the yields lower, which in effect should mean that this bond yield spread should be start stalling and coming down. However, there's always a little bit of a fear if you start selling in such a strong rally, and I understand that. So I'll be probably waiting to see how market plays out before I start thinking about shorting EURUSD again, specifically of this whole dynamic playing out. And it's good to understand what is driving it higher. And to be able to stop this surge, you obviously need you need US yields to stop dropping, and on the other hand, you also need that German bonds start moving higher again, which would then drive this whole thing lower as well. So I'll be looking out for that. In the medium and short term, I'm not very interested to sell EURUSD just yet. I'll be more likely to look out for the dynamic to start looking into into more swing trades going forward. So I have two trade ideas: one AUDJPY short early in the week, NZD CAD possibly short if it makes all the right noises on Wednesday, and EURUSD looking for a point of where, okay, we are sure this is moving higher, or we are starting to top out, and we can start thinking about shorting EURUSD again. I'd highly recommend looking at the weekly Forex calendar every single week. Basically what it is, it gives you guaranteed volatility on specific times of the day, which saves you a lot of screen watching. So for instance, if you sit down on Monday, you see 20 pip ranges, you know, because there's not a lot happening in the weekend. The majority of the big events are mostly clustered around Wednesday and Thursday, so that's where you want to be a bit more active, because you know you will have that volatility to drive your trades towards your targets. Keep that in mind, it's really fruitful. And the direction isn't always easy to discern, but what you will at least have the volatility to drive trades instead of just sitting in choppy markets and get taken out both sides of your take profit and stop losses. So I hope you found this really useful. Again, a couple of good events playing out next week, a little bit wait and see, and hopefully we'll snatch a couple of good trades. That's all from me. Thank you very much.